Okay, so let's have a look at Part B for 2019 club account, Crest Wood. So it says, show an income and expenditure account for the year ending 31st of 12th, 2018. So before we do the income and expenditure account, we will have to do a quick profit and loss account for the bar. So we need to find our sales, so our bar receipts, 66,200. We need to see, is there anything owed to us or from our debtors. So we have debtors at the start of the year of 480. So because that's from the previous period, that's going to reduce our bar receipts. And then we're going to see if there are any debtors at the end of the year. And we do. We've bar debtors of 500. So that's for this period. So that's going to increase our receipts. Now remember, our receipts, they're going to be our sales. So that's going to be our sales figure, money coming in and out of the club. Then we're going to have our cost of sales. Our cost of sales is going to be our opening stock. I'm going to see, do we have any bar opening stock at the start? We've got bar stock, 5,800. So that then we're going to add on our purchases. So the exact same thing, our purchases. Do we have any creditors owed at the start of the year or any creditors at the end of the year? And we got bar creditors at the start of the year of 750. So that's from the previous period. So we owed 750 from the previous period. So that's going to reduce our bar purchases. And then do we have any bar creditors at the end of the year? People who owe us money at the end of the year of 1,223. So they must have bought stuff from us. So that's going to be extra purchases that we have. So that's going to increase our credit purchases. And from that then we're going to take away our bar closing stock. And we've got bar closing stock, which includes catering stock of 400. So we need to take that 400 out and just have our bar closing stock itself. That catering stock then will probably be used later on when we come to our catering purchases. So let's have a look at our workings then for our sales and our workings for our purchases. These are our figures then. So our bar sales, 62,600. Or sorry, 62,200. That's coming straight from the question itself. So we've got our bar receipts, 66,200. Anything at the start, so our debtors at the start, we're going to take that away because that was our previous debtors. So our previous debtors then, 480. And then we're going to add on the debtors at the end, which is 500. So our sales is going to be 66,220. Now our debtors at the end of 500, that's going to go into your balance sheet as a current asset. And this 66,200, that's going to be your sales in your trading account. You can do the same then for your purchases. So how much were our purchases in the question? So we're going to go to our payment side. Bar purchases, no, make sure you use the bar purchases and not the credit catering purchases. So bar purchases, 38,700. To that then, you need to take away our creditors at the start of the year, which was 750, because that was belonged to the previous period. And then we're going to add on the creditors that we have at the end, because that's belonged to this period. So your creditors or your bar purchases will look like 38,700. Take away the 750, add on the 1,230, which is also your balance sheet as your current liabilities for your creditors. And then your trading account then for purchases will be 39,180. So remember, all these figures are made of your purchases. So if creditors owe us money, that had to come from us purchasing it. And if we owe debtors, that will come from sales. Or sorry, if debtors owe us, it will come from sales. So your trading account is going to look like this then. Same again, you're going to have your bar trading account, your little heading at the top. Then you're going to have your sales, which is coming from working A, working 5 that we just did. And then you're going to have your cost of sales, which is your opening stock taken from the start of the question. You'll have your bar opening stock, which is up here, 5,800. You also have your bar closing stock down here. Remember, there's an extra 400 on that we need to take out. So your purchases then come from working 6. And then you're going to have your closing stock, 13,400, which is your 13,600. Take away your 400, which will give you, 13,200 is your closing stock. So now you can take your figure away then from your sales, and that's going to be your gross profit, and that profit is going to go into your income and expenditure account, which is going to be the next part of this question. So remember, your sales, link it to your debtors, your purchases, link it to your creditors. Anything that you have at the start of the year, you're going to take it away. Anything that you have at the end of the year, you're going to add it on because it's for this period. Your opening stock is going to be taken from the start of the question, and your closing stock is going to be taken from the end of the question.